So the new job retention scheme, how will it work from November 2020? How will it support you as an employer, and how will it support you as an employee? Check out this video as I go through all of the details. Hi everyone, my name is Simon Misiewicz from Optimise Accountants, and in this video we're going to be talking about the job support scheme. Why is this beneficial? Well, for an employer, you will want some financial support from the government to pay your employees, especially when they're not working. And for employees, well, the whole thing about lockdown can give you fear about your job security. So the government is trying its best to help your employer keep you in a job. So before we go into the details, there has been a video that I've created before talking about the job retention scheme, and that was in place before this new job support scheme. So do check out that video, especially if you're an employer looking to make sure that you did everything you could correctly. I also gave a update to the job retention scheme from June 2020 as well. So please do check out that video for the updated version from the original job retention scheme that was out there. I have provided a link to those videos, and they should have been appearing above my head as well. This is the new winter government support scheme, which will be coming on board from the 1st of November 2020. This is to enable the government to provide support for employers to keep hold of their employees. So do check out that. If you're interested in how to develop your own business, or whether it's your property investment portfolio and you wish to reduce your tax liability, there is an online portal. Every Wednesday I am there, so you can ask your tax questions of me each Wednesday at 7 p.m. There are a bunch of videos, calculators, documents, you name it. There are over 100 artifacts to help you grow your wealth and reduce your tax liability. There is a 7-day free trial. There is a link appearing below this video and above my head right now. So let's talk about the winter economy plan. Now, you remember that the job retention scheme was in place from a while ago, but that will end the 30th of October. The new scheme, which is the job support scheme, will start from the 1st of November 2020. Now, the way it's going to look is that it will start on the 1st of November 2020, but will end on the 30th of April 2021. Now, for eligibility, it basically means that the staff member in question has a job, but will be affected because of lockdown. Now, that could be pretty much the enforced government lockdowns that we're seeing throughout the UK. If they are not going to be working full time, this is where it's going to be. They need to be working and not totally unemployed. So from that angle, what the government tries to do is ask you to keep your workers working, but maybe have reduced hours. And if that's the case, then the government will provide that financial support to you. The financials, employers will pay for the time, a third of the time that employee is not working. And then the government will also provide a third financial support, so 33% of the time that the employee is not worked. But there is a cap in place amounting to £697.92. I will go into a bit more of an example about this because it can be quite complex to understand. If you want to talk about the job retention scheme or any other tax planning, then please do book a call. There is a link appearing above my head right now and indeed below this video. So make sure you use the code YouTube25 to get your 25% discount. So in the winter economy plan, what we've got now is got the annual salary. And what I'm going to do just quickly is use my highlighter here. So you've got the, oops, no, not that one. I was aiming to use the laser pointer, I should say. So imagine you have a salary of £70,000 as an employee. Your employer is obviously paying you that. But if you break it down per month, you're paid gross 5833.33. Now, what's happening here is that you might agree for you to work just 50% of the time. You are needed, but not needed as much because of the lockdown, and therefore demand on your workload isn't there. So the employer and yourself may go through HR consultation to say, well, how does this really work? Can you work part-time and then have part-time at home to be with your loved ones? So if that's the case, your salary of £70,000 would be dropped from an annual basis to £35,000. Your gross monthly income would be £2,916.67. And then obviously you've got the same again unpaid because you're effectively giving up half your wages. Now, from an employer perspective, this is good because it does help you to continue with your business, but not have the frightening aspects of having less income coming through the till or the bank accounts, whatever products or services you're selling, and then still paying your employees the same amount. For employees, clearly there's a financial benefit and not so much of a worry if you're going to get this financial support. Now, I'm going to focus now for the employee, and I'm then going to focus on from the employer's perspective what all this really means. What you'll notice that the unpaid work, which is the £35,000 or on a monthly basis of £2,916.67, that's the amount that is due to be unpaid. Now, what the government are saying is the employer must chip in with 33%. So if we look at that from a monthly basis, they're expecting the employer to pay £972.22 to the employee for them not to work. The government will also provide some financial support, but you'll notice that even though the literature on the government website is a third, they are going to cap that amount to £697.92. So that's why it's got the word capped there. In total, the unpaid time will be government support there. This is the amount of money you will not receive from your salary. So there's your 2,916. Don't fear, you won't be subject to that reduction. The total reduction as an employee would be 1,246 from your monthly salary. So you can see there that you've got 50% of the time that's not being worked because the demand's not there. You've been asked by your employer to stay at home. But you are only going to be subject to a 22% reduction. Now, this amount of reduction is actually less. It could be 20% if there's no cap in place. But I want to show you from a perspective of someone who's got a high paid salary. For the employer, what does this mean? Now, the employer is paid obviously 50% to the employee already to keep them in work. Now, what they're going to have to do as well is pay this $972.22 in addition to the $2,916 that's been paid to them gross. In total, the employer is going to be asked to pay this $388.89 for someone with a salary of £70,000. So you can see there that ultimately they've got to pay this $46,666.67 for someone who was originally on £70,000. They are going to be working for 50% of the time, but you are going to pay them for 50% of the time that they are working, plus this 33% that they are not working. But you do have to weigh up now the total cost of having that employee sitting at home. Do you keep them employed as the government is aiming for you to do, or do you have to make a hard decision? I would always ask you to speak with your employee and have some sort of HR specialist, legal specialist to help you through that financial decision making process. Don't forget, if you found this video useful, do give it a thumbs up. That really helps with the YouTube algorithm. If you have any questions at all about this subject, then please make sure you ask your comments below this video. And don't forget to subscribe to this channel so that you do not miss out on any future videos. Until the next time, my name is Simon Misiewicz from Optimise Accountants. I'll see you again soon.